Italy moves to ease pressure on consumers, announcing a temporary cut in diesel taxes amid rise in fuel prices. The emergency measure comes as fuel prices surge once again, amid renewed volatility in global oil markets, driven by continuing instability in West Asia and fears of further disruptions to energy supplies. Prime Minister Giorgia Meloni's government approves an emergency decree, slashing diesel excise duty by 17 euro cents per liter. Combined with VAT adjustments, the tax relief will remain in effect until August 6th in an effort to bring down fuel costs for households and businesses. The package is expected to cost the government around $125 million, funded through excise tax revenues, antitrust fines, and other public funds. Rome says the measure is designed to provide immediate relief, as diesel prices continue to weigh heavily on transport, farming, and everyday consumers. Taking to her X, Prime Minister Giorgia Meloni calls the move a necessary short-term intervention. She says the government is responding to extraordinary international circumstances, while working within Italy's limited fiscal resources. Economy Minister Giancarlo Giorgetti also announces tax credits for the trucking and agricultural sectors. To cushion the impact, Italy had introduced temporary cuts in petrol and diesel taxes in March. Those measures were extended several times before expiring on July 3rd, after costing taxpayers nearly $2 billion. The European Commission and the IMF later criticized the broad tax relief, saying support should have been targeted toward the most vulnerable households. Since the previous tax cuts expired, fuel prices have climbed again. Average diesel prices across Italy have risen above $2 per liter, while motorway fuel stations are charging even higher rates. Consumer groups welcome the government's latest intervention, but argue the savings remain too small, with filling a standard fuel tank still costing more than $100. The price surge highlights Italy's dependence on imported crude oil, leaving the country highly exposed to global energy shocks. Officials warn that continued geopolitical tensions in West Asia, coupled with uncertainty over the future of U.S.-Iran diplomacy, could keep oil markets volatile, making long-term fuel price stability increasingly difficult. At the same time, Rome is looking beyond temporary fuel relief. The government is considering seeking European Union approval to run higher budget deficits through 2028, allowing additional support for electricity and gas bills. Italy is also balancing rising public debt, projected to reach nearly 139% of GDP this year. For now, Italy's diesel tax cut offers short-term relief. But the bigger challenge remains, with global energy markets still sensitive to developments in West Asia, and governments across Europe struggling to shield consumers without worsening public finances. The path to stable fuel prices remains uncertain.
If you like this video, then like, share and subscribe to Mirror Now.